Hello, this is Neil Richardson from Berkshire Hathaway Home Services, Georgia Properties in Atlanta, and here is my September 2023 market update. I believe we are in a down market, and it's only a matter of time before the dam breaks and the floodgates open. I want everyone watching this to understand three things walking away. Number one, to truly understand the reasons why there isn't enough housing or inventory out there. Number two, why we're in a down market, and I have multiple data points to support this. And number three, why the next 6 months, I believe, will be the best buying opportunity we will see in the next 10 years. Now, not many people understand this, but the demand structure of the US housing market is driven by demographics. A lot of the time, the media go to the economists, they go to financial advisors and financial analysts to get their outlooks and projections, whereas really we should be looking at the demographics. Now, with that said, there's an increasing wave of household formations, which is defined as the 33-year-old coming of age group. They are the first-time home buyers. Now, with that formation group, you can see back in 2010, the demand really dropped off. Look to the current day and we have a real spike. That spike isn't going anywhere for the next 15, 16 years. Now consider this doesn't include immigration. These numbers are only based on US births, so immigration will only increase the demand. Now let's look at supply. US home builders are simply not keeping up with demand. Between 2010 and 2019, the US home builders only built 5.8 million units. That's comparable to the Great Depression of the 1930s. The 1950s, 60s, 70s, 80s, 90s, and noughties, each of those decades produced over 20 million units. We've seen a huge drop since 2009. Now, Realtor.com are currently suggesting we're 8.8 million units short. Personally, I believe that number is far higher. But if the demand is increasing and the supply is weakening, what do we think is going to happen to the home prices? So where are we now? I truly believe we're in a dam market. The rates going up signifies the dam going up. Behind it are all of the buyers. Buyers and sellers alike perceive themselves to be in interest rate jail. Sellers won't list the property. Why would they when they have a 3% mortgage and they know they can trade it in for a 7% mortgage? When the rates hit 5%, I believe the dam will burst and the buyers and sellers will flood the market, leading to a price acceleration. From March 2022, we saw a steep acceleration in interest rates. It was the Fed's way of combating inflation at the time. It's stayed up near the 7% mark now for some time. The key question is, when are the rates going to come down? If we look at Realtor.com, Fannie Mae, Freddie Mac, the National Association of Realtors, everybody's predicting sometime in the next 12 months that the rates will come down to the low sixes and even mid fives. When the rates come down, buyer demand will surge to levels we've never seen before. Sellers will leave interest rate jail. That will have a net neutral effect on the market. You have one seller, one buyer. The key message is the longer you wait, the harder it will be to move. Hidden forces now, this is interesting. Available money on hand in US bank accounts. If we go on the Fed's website, they have what's called the M1 chart. Now the M1 chart from 1980 showed 400 billion in cash out there in US bank accounts. By 2020, there was $4 trillion out there. Then COVID happened, stimulus measures were put in place and cash was pumped into the economy. We went from 4 trillion to 16 trillion overnight. Never before in US history has this happened. Now, this is essentially what's causing inflation. You've got too much cash out there and too little goods. On top of that, home equity has incredibly increased since 2020. $10 trillion to be precise. So between the 16 trillion that was injected and the 10 trillion that was gained in equity, there is $26 trillion more out there since 2020. If you ever wonder where all the cash buyers were coming from, that kind of explains it. Now, let's look at market stability. It's important to recognize the robust foundational strength of this housing market. The majority of homeowners out there have a mortgage average under the rate of 5%. 2 out of 3 homeowners have significant equity in their homes or no mortgage, which was unlike 2008. This contributes to the most stable housing market we've ever seen. So in summary, supply pressures are only getting worse daily. There's no fix in sight. Prices will continue to keep on going up. Demand is being held back with the interest rates, which will be unleashed as they come down. Sooner is better than later. Time is not on your side. Get the property now and refinance in 12, 18, 24 months. And how would you feel if the home you wanted was 10% more next year with 2 or 3 as many buyers fighting over it? Owning is winning.